Hey everyone, this is Ricardo Braddock, aka Real Estate Braddock, and today we're going to be talking about how does a client start with the lending process and their particulars so that they can get finance, right? So today I have
Tyler Croft here with CroftandCoLending.
nice. So Tyler and I met each other, and he explained his business and how, of course, he loves helping people out when they're looking at buying their home. He has definitely a lot of programs, but today we're talking about client sees you, sits down. What do they need to bring to the table? How do they start with this thing?
Yeah, so whenever we're pre-qualifying or pre-approving a borrower for a loan, there's so many different scenarios you can run into, man. And I'm sure just being in the business, like everybody's situation is
Different.
so different. And there's always something, there's maybe a nuance, or it's more trying to explain to them or walk them through the different, what are those? The terminology
Oh yeah,
and stuff like that, right? Like
yeah.
trying to make sure they're comfortable with the wording and setting
Yes.
expectations. And that's where it all starts, is setting expectations, asking those proactive questions, understanding their goals, their life, and kind of where they're at and who they are.
You don't want them later to be like, well, I didn't, you didn't explain this to me, because then that kind of feels like, ugh. So you definitely in the beginning want to sit there and kind of break it down, Barney style.
Yeah, exactly. So once we've, at least established or have established that kind of relationship,
Yep.
or at least communication barrier, right? A lot of times there's this barrier where I like to use analogies a lot, man. So when I work with people, I tell them, hey, like if I feel resistance in the conversation and they're not giving me information that I need, a lot of the times I'll break it down. Hey, if you, let me put it this way. If you were to go to your doctor and sit down and you got a problem, but you go through the whole deal,
Yeah.
just like, hey, so what would you do if, and kind of beating around the bush and not giving them all the information or not answering all of their questions, or you didn't mark down there that one time you had an STD, right? Like the same thing, right? Same situation.
Yeah.
But with a financial advisor, you have to be so open and available with all of those things. And I love that analogy, because like it kind of gives the loan officers and originators and even real estate agents like that authority in your field.
Yeah.
Right. Like doctors have that authority because they've gone to school for so long, and that's their title. They earn a degree.
Yeah.
Right. We get our certificates in a very short period of time. Right. And so a lot of people discredit our authority in the field and our knowledge. And I can tell you it's invaluable, and you really need to open up to your professionals,
Well, of course,
for what you're looking for.
Well, because again, like you were saying, it's like now they can't truly give you 100% of themselves, the lender or the doctor, right? He's not going to be able to then really guide you on what to do next, because you left out some information because you were scared that it might actually impact you negatively.
Exactly. And do you want to be misdiagnosed?
Yeah, exactly.
Do you want me to put you in a DSCR loan when you're buying a primary residence? Like, no, you don't. You don't want the wrong product for the right solution, right? So you need to definitely be open, and that's where everything starts. So to anybody watching, anybody looking to get a loan, make sure just 1,000% be open, honest. If there's something that's happened in your past, is why you're nervous about getting lending or don't think you qualify, just spill the beans up front and personal, because later, if it comes in later in the transaction,
that's gonna hurt.
Everybody's gonna be mad. It's not a good situation.
And when you tell them, right then and there, when you're sitting with the lender, they're going to be able to say, well, listen, we're going to work on this part. And you would have never known that if you didn't actually let them know that, hey, well, I do have this thing from back in the past. And again, like he said, if you find out in the middle of this transaction, that's horrible. You probably lose a chance of getting that house. But if you would have explained to the lender at the beginning, he could have guided you through and said, this is what we're going to do here. You'll be okay because we're going to do it this way.
Exactly. And one thing I pride myself on is just my experience in my career. Is I started in collections for Bank of America, of all places. And man, that job it just drained you, bro. And the pay was not great. And, but I learned a lot. Like I learned so much about the process and how collection accounts work and credit. And all the different things you can do and how things report when you do go delinquent, when they report, the
Yeah.
time frames. It was invaluable experience. I would never do it again. But-
Right? And it helped you for your clients now. It's helping you for your clients now, that experience that sometimes people don't understand, that you have other experiences that will help you in this process.
Exactly. So that's one thing I pride myself on, is bringing that into every transaction. I can bring that wealth of knowledge of, hey, like I see you've had a late payment. Here's why.
Yeah.
Like if they don't understand it, or that shouldn't be late, and they get combative, like, yes, I understand, but there's probably nothing you can do about that at this point, unless it truly was incorrect or invalid. Just bringing those, that knowledge and confirming things for people through their credit reports as we get applications.
Okay.
So that's one thing I love about it.
So now that they've sat down with you and you're kind of going over, all the stuff that needs to happen to start getting them the lending, like what other questions are you asking them, so that you're picking the right lending product?
Yeah, so great question, man. So there's the biggest one is, how long are you planning on staying in this property? If it's a primary residence, what are your intentions for the property? That's like guide based number one.
Right.
We need to know, are you buying an investment property? Are you buying a primary residence? Like, why are you buying? What's your motivation? What's your intent for the property? Things like that. Because those aren't really things that are asked throughout the application.
Yeah.
A lot of the questions are asked on the application, but there's so many proactive questions like that we need to be asking. And if your loan officer is just sending you the application and then after they receive it, they're not coming back and asking you those questions, probably a red flag. You want to make sure
You got the right loan officer that's doing your shit.
Yeah, that, and I mean, it's just knowing that everything is covered up front.
Yeah.
It's being proactive in the transaction and ensuring to catch cues. So one thing with mine, with a recent client of mine, he has a corporation, and so he files his taxes as a C corp, right? So there's a difference between a S corp, a C corp, sole proprietorship,
LLC.
Schedule E's for your rental income, all that stuff. So the different types of incomes come into play on what type of loans you're going to need and what type of underwriting you're going to need, because some lenders do it differently than others.
Yeah.
So as a mortgage broker, we work with 100 different lenders.
Yep.
So I can't tell you exactly what each underwriter is going to say. So knowing those things up front to be able to bring those scenarios to those lenders and say, hey, here's it all spelled out for you. That's my job, is to spell it out for them and go, all right, now give me what you're going to need or how we're going to work together to get this deal done. And he had an S or a C corp. The fiscal year on a C corp is a lot different than your regular fiscal year, right?
Okay.
So you're not filing your taxes quarterly or on a certain day. His was on, I think it was December 12th.
Okay.
Was his fiscal year, or November 12th or something.
Okay.
So that's when his year started. He doesn't have to file for 4 months after that. So most people are like April, they file.
Yeah.
But his would be for 2022 this year. For last year, he would file it in November. So for this year, he hasn't filed for 2022 yet. And it's already the end of 2023, right? But it's totally fine. Underwriters they're not gonna dial that in right away. Processors are gonna ask you for extra documents, and knowing that up front and those little cues that you find in the documents,
eliminate some shit.
You can eliminate that conversation or that hiccup at the end, towards the end of the transaction. Hey, why don't we have this? We need this extra tax return. He's not going to be able to provide those things, right? And having that conversation. Hey, do you realize this is a corporate return, not a or a standard W-2 or 1099. Yeah, and so just having that little bit of knowledge and working with the different types of incomes, that's a very proactive thing that we do, and ask those questions. And once we gather those documents, kind of walk through that. But
is there situations where you do kind of work with a client, maybe with a credit score, you try to help them improve that, you guide them in improving that, so that maybe it takes them 3 months, and then you can go in and say, okay, hey, look, it improved, and now you meet certain standards in lending. Yeah.
So there's different criteria, especially for different score models, right? So if your middle score is a certain number, and we need you to be from 680 to 700 to get you the product that you want. whether it's down payment assistance or it's just to get a little bit better rate, you know, whatever that situation is. We have tools that are called what if scenarios that I can go into, and I'll literally go into the credit report, put in there, I want them to be a 720, and I can move and modify their credits, add credits, so I can look to see, hey, if you just open a credit card, maybe that's going to help, you know, boost your score. Sometimes it does, sometimes it really does the opposite.
Well, in that situation is because if you get more credit line, now it brings down your utilization, 30%. Thank you. 30% or lower is like always good.
Yeah, and so utilization is a big one. One of the biggest things that I've learned is when you have a new card come onto your credit, the age of history is very important. And so opening new cards right before you do something, honestly, it can impact you negatively depending on where you're at in your credit history.
Okay.
If you're somebody who's established already, and maybe you have a, you know, 740, a 780 already, your 800s, you're doing great, and then you go open a new card, that age of history, you have 20 years of history with that, you know, Wells Fargo card and that Bank of America card and, you know, PNC, whatever. You have all of these, you know, histories and lengths of history. Now you just started a new one with, you know, a credit union, and you're like, great, this is wonderful. Or I opened it to buy a car, or, you know, in a UTV or whatever. They suckered you into a mattress. Like, you open that one little card, and now it's averaging those 20 years against 1 year. So you're adding all these up and you average them. Well, 20 and 1, that's a big difference. You're going to drop, and especially when it's so much easier to go from a high score to a low score.
Oh, it is. Then to go up, right?
To go up,
What's up with that, man? That sucks.
Yeah, so you got to earn your credit, man. Like, you know, you got to get street cred.
I always tell my kids that it takes a lot of time and effort to build yourself, right? Build your life, your wealth, your everything good. It takes one mess up, just one, to knock it down like faster than you can blink an eye, bat an eye. And same thing with credit, man. It takes forever to get yourself really good. So for you people out there, you know, interested or in any of this information, just think about that it takes nothing, just one mess up to really mess up your credit and mess up the chances of getting a loan or something. So now that you're, you know, going through all that credit, you've sat down, did the proactive questions, got all that information. What like program you putting in my FHA, conventional? What is, you know, why would you put them in one or another? Give me some examples if you can, so some of these people know that, oh, I would like that one if that's what I can get.
Yeah. So a couple simple ones are your Govy programs. You have FHA, you have VA, USDA. USDA is going to be very specific to the regional area, you know, low down qualifications. You're going to have your income in a very specific spot. And then your VA, if you're a veteran, you qualify. Basically, it just depends on if you're going to have some extra fees, or you're going to have fees waived, or, you know, how that works. So those are pretty simple ones. FHA is one that's open to everybody, right? So anybody can get an FHA loan. Or qualify. I shouldn't say that everybody could qualify, but it's available to everybody as a government, you know, backed loan. And then you have your regular conventional loans, right? So Fannie, Freddie, just standard 30-year, 15-year, 20-year loans. Now, the difference between those two are going to be, like I said before, I like to use analogies. So when I talk to my consumer, it's, you have a 3-legged stool. Right. And you have one leg is going to be your income, one leg is going to be your credit, and then the other leg is going to be your assets. Okay. If you have all three and they're all great, we're going conventional. Okay. 9 times out of 10, you're going to go conventional. You're putting enough money down. You have good credit. You have a good income history. Like, there's really no reason for you to need something that's meant for somebody that's missing a part or a piece of those 3-legged stools. You take one leg away, that stool's not going to stand. So you need to put something there that's going to hold you up, right? Right. So there could be a non-QM loan that puts all 3 legs up for you, right? but then you have your FHA, which is meant to, hey, I have a borrower who has maybe a little bit of a credit deficiency in their application. They're like 580. You know, they still have really good income though, and yet they've just been through some stuff. It's all things we can get over, but we need a little bit of help there. And the rate on a conventional loan compared to an FHA loan with that credit score is huge. It's a big difference. So
Worse or higher.
yeah, so FHA is going to be a lot better. Conventional is going to be a lot higher because mortgage insurance is going to be more expensive. There's just so many more.
Yeah.
There's so many more things that
And
you
even
have
with
to factor.
the conventional having the better, all the 3 legs on the stool, and this one kind of wobbly, legs on the stool, this one's still going to be higher in rate.
It
The
could
conventional,
be. It could be. Yeah. It really depends on the full package.
Well, yeah, everybody's
is
different, right?
but it can be. Yeah. I've had scenarios where we look at somebody's credit profile and it's like, yeah, it actually makes more sense, even though you have all these.
Yeah.
FHA is going to be cheaper for you.
Wow. Okay.
Hey, this is great, but you're going to have that caveat in that other conversation of you're going to have mortgage insurance, whether you put 20% down or you put 5% down, and that's going to be on there.
Yeah.
That rule changed a while ago, and it's not like you can just remove it. You have to refi out of it.
Yeah.
Cool thing right now is a lot of people are going to have to refi or going to refi in the next few years.
For sure. Who's buying within the last year? Yeah.
So FHA is definitely still an option. We consider it when we're pricing things. But the better solution is still going to be conventional if you have all the legs.
Right.
Right. If you're missing a leg and you don't have that, you're going to want something to fill that gap. And that's where FHA and Govy back programs and other products can come in and
give you support.
Give you that support. Yeah, exactly. That's what they're meant to do, if you want to paint a picture, right? So
nice. Yeah. I mean, it's like I said, but they won't know that unless they come in and see you.
Yeah.
And you go over everything and give them all the information. Don't be hiding. I'm going to go back here. Don't be hiding, any information from your doctor, or in this case, your lender.
Yeah, it's true. And I mean, we don't always want to know every little detail. I don't need to know what time you go to the bathroom, and I don't need to know that stuff.
Yeah.
But it's good to have a general understanding of who that person is and where they're headed with their life too.
Yeah.
So that's part of the proactive question and building that relationship or rapport with the consumer that just a lot of people don't do when you're in these high volume. And I know this is something you pride yourself on when you have somebody that's very high volume, and they have a bunch of team members. Great, that's awesome. But are they able to give you that quality? Yeah, and sit back with you and walk through things. And I personally I have my limit of how many deals I like to do every month, and I keep that close to my chest with. Hey, if I'm getting outside of my comfort zone, I need to divvy this out, or I'm happy to refer it to one of my partners.
Nice. And
just go with that, because I'd rather be giving somebody all of my attention and building that rapport.
Thank you. Yes.
And stuff versus just handing it off or not really getting all that information. So this high volume people really do tend to do that a lot of times. You see their commercials, and then you get the person in front of you and you're like, wow, I just didn't feel the love.
Yes.
They talk about love and they talk about all this stuff, and then you get in front of them and you just don't feel it. You don't feel it generating, right? And the excitement of what they do, and that's a big deal for me.
And I can appreciate that, because again, we're from the same cloth, where we really want to give ourselves 100% attention, and that's what I really, really like about him, is that he will give you that 100% attention. With communication, we were talking about that, because I was explaining to him, like, hey, I'm a big communicator. I may even over communicate, but I'd rather have that than waiting on my lender or my realtor. Me, you're not going to wait on me. Anytime I get information, I'm sending it to them. I'm letting them know what's coming up, letting them know the steps. So they're ahead, a couple steps ahead. I don't want them to feel that they're behind. And that's what you were telling me you do too, which I can appreciate that.
Yeah, man. It's honestly, sometimes I feel like it can be a negative in the fact that it scares people that don't need that information, right? And I'm sharing too much, but like you said, I'd rather be over communicative and you be aware of what's going on, and why I'm doing it. And I'm happy to walk you through and still give you the confidence in the transaction that, hey, just because I'm telling you this doesn't mean the deal's not going through.
Or you have to go run and do something right now. This is just so these are what may come down the pipeline, or just to be aware of these things coming down the pipeline.
We're all a team in a transaction. The consumer is the boss, essentially.
Yes.
And I'm a worker at this point, and you're a worker. Yep. The title companies are workers for them to get their deal done.
Yes.
They're funding these deals. They're we're providing value to them, not the other way around.
Right.
And so I want to make sure that they understand what I'm doing throughout the entire transaction.
Perfect.
If I can do that and I have a high D, and I don't know if anybody watching this knows what that means, but a very dominant type personality that's just like, give me the facts and, give me the facts, the options, and then get off my line, stop talking to me, get out of my face. And we all have those people in our lives. Don't say you don't.
Right.
So if you have a consumer like that, then great. That's fine. I love that too. I'll still try to over communicate with them a little bit because you do need to push those things on those people to say, hey, like, let's break that barrier because you're trying to tell me just do the work and get to you with it.
Yeah.
But if I mess up, that's my reputation that you're holding in your hands, and I need you to hear me out and take 5 minutes.
Yeah.
So you meet high D with high D, right?
Well, and it's also protecting yourself as well, that you did provide information sometimes. Unfortunately, we get rambunctious clients. And so, you want to make sure that they're getting all the information. So later they can go, whoa, he did give me that information, and at least we did our job in that sense. But I always think the clients at the very end, when the whole transaction is closed, man, this was the best communicator I ever had, even though they were kind of a little forced against you during the process. And like, I don't need to know all that. I don't need to know, you don't need to call me so much or whatever. I think at the very end, ultimately, these clients appreciate that because they're like, well, he's the first guy that's actually always kind of kept me ahead of everything and was telling me things to prepare for. And wow, like I can appreciate that. So I think ultimately they do that.
Yeah. They don't want to be blindsided, but they don't want to know. So it's a catch-22. So sometimes you really do have to force it on some people. And I personally, like you, that's just the way I work.
Yeah.
I'm a analytical type, if you will. So when I buy things or look at things, I like to know all the details, get deep in the weeds, the numbers, and really go through that. But I also love a good story. So if somebody comes to me and you're trying to sell me something, man, bring me a good story and I will listen to you. Like if you're like, hey, what if I told you? And I'm not probably going to list you if you just start that way. But if you come in with that, high energy story and you're just like, oh man, you just bedazzle me with.
You got to hear this and this and this and this and happen. You're like, oh, okay, let me hear what's going on.
You did that for a client? Great. That sounds to me like you're going to be able to do that for me. And so. Just knowing and understanding people and who they are and your audience is a really big tool that I like to use, and it keeps me self-aware, to be honest, because sometimes like we're talking about right now, if you know who you are and the way you operate, you can adapt a little bit. You're never going to change completely, but you can truly adapt your style and how you communicate with somebody, and I think that's just an endless tool.
And you're never going to please everybody.
Yeah.
Never. I mean, so as long as you stay within your realm on helping these clients, again, ultimately at the end, they'll appreciate it, whether they pushed and pull a little bit. But as long as you stay true to yourself and what your main goal is with these clients and helping them as soon as they come from calling you to sitting at your table, wanting to get this done to the very end when you're closing, you've kept pretty much how you work and how you are, and you know that you're actually benefiting them. Ultimately, at the end, I think everybody appreciates it because the transaction would go a lot smoother that way.
Yeah. No, I completely agree, man. But when it comes to your consumer, this is one of the largest transactions with rates, as high as they are currently compared to what they've been. And, with values still being high, all these factors against affordability right now. Rate sensitivity is a big conversation. And I know lenders that are going out there and they're trying to avoid that rate conversation. I like to hit it head on. Like, hey, this is, can we even look at this? Like, a lot of people call you directly for that. Hey, give me a rate. And I'm like, you know what? I'm not opposed to, trying to quote you something, but until I know your situation, like, I'm going to give you an average.
Yeah, and that's going to be a nasty average. The last person I had on, he said, it's a big average and you ain't going to like it because you're still not going to know much.
Yeah, exactly. So you're like, hey, here's your anywhere from 8.5 to 6.99, maybe even lower if we do temporary buy downs.
Maybe even higher if I find some crazy stuff on your.
We're like, hey, you need hard money, bro. We're going 14%, no questions asked. Here's a check. But there's a lot of different ways you can get these people involved in their stuff,
Yeah,
and just knowing who you're talking to is the
Nice.
best possible solution.
So is there anything we missed that you're, want to let everybody know? Anything specific or special you guys have going, or, just anything that they'll take with them to say, these are the guys I want to check out.
Yeah. So one really big opportunity that I'm just so grateful that I was able to be a part of is I partner with Platinum Builders Group, my builder.
Yes.
And he's got some spec homes. He builds brand new homes. Check him out. Follow me on my social media, and you can find some incentives. So I'm currently offering one of the 3 different incentives, 3% concessions towards a permanent rate buy down from the builder.
Nice.
And he builds on acre lots. These aren't, cookie cutter homes in places. These are nice homes, anywhere from maybe 700,000 and up.
Yep.
Depending on what you want to spend and do. And it's really like walking into a new build feel, right? Like you walk into their office and you kind of look at their plans and do their thing and go, all right, cool. Like, this is what you want. Or they'll come to you and talk to you about your needs and wants and really just make it personable.
That's cool.
But yeah, the big selling point is you can get that acre lot, that dream custom home, right? That picture frame, ideal on your wish board house. And you can get the incentives that these big box builders are offering. Yeah. So like Fulton Homes, all them. You got another one that's, we're doing 3-2-1 buy downs. Great. I got a builder that's local in the area.
That's rare to have that.
Yeah. And so we're offering that incentive if they use me as the lender.
Well, there you go. I mean, shoot, you know what I'm saying? You can get the new build feel, but not through a big new build corporate, company.
Yep. And it's on acre lots. Like, it's you're not on top of your neighbors.
No, see little 5, 6, 7,000 square foot lots and stuff. Those are tiny. Yeah. So, well, look, man, Tyler, I appreciate you coming out. Good information for my clients. I'm going to have all your information underneath you. So I'm going to have all his information there to reach out. And yeah, man, contact us if you're ready to buy or sell your home, or if you need a lender. He's got your back. I wouldn't put people up here if I didn't trust that they're going to do good for clients, and especially my clients. So I appreciate you. Tell them where they can reach you at.
Yeah, so I'm on at CroftandCoLending on Instagram, and then CroftandCoLending CroftLending.com is my website.
Okay.
So yeah, everybody should have all my stuff there. All my links are on there, and then on my Instagram, all my links as well.
There you go. Perfect. Well, I appreciate you. And this is another great open house. Real Estate Braddock out. Peace.